Vinovest, investing in wine and whiskey for 12 to 16% returns. As of 2021, the global wine market was worth $340 billion. Wine has outperformed the S&P 500 by over 30% in the last year. Here's how to make a 12 to 16% target return with Vinovest. Vinovest is a transparent and liquid platform for buying and selling investment-grade wine and whiskey. The company was founded by Anthony Zhang and Brent Ackerman in 2019 with the mission to democratize fine wine investing. Vinovest has around 50 employees and has raised $10 million in funding to date. Vinovest is open to all investors who want the following: an asset with a low correlation to the stock market, ownership of individual wines, the freedom to drink from their collection, no hold times or minimum balance, the ability to invest without a broker. Vinovest also has an auto-invest feature for investors who don't want to actively manage their wine portfolio. The wine asset class has historically enjoyed a low correlation to the stock market, jumping 9.7% during the first half of the 2022 bear market. Over a longer time horizon, wine has returned an annual average of 10.44% in the past 5 years. Vinovest's average 5-year historical return was 12.4% net of fees. Vinovest provides a liquid market for blue-chip wine. Investors can buy into their offerings from $1,000 and make money if the wines in their portfolio appreciate. Vinovest makes money by charging an annual fee that ranges from 2.25% to 2.85%. Additionally, wine purchased with the auto-invest feature reduces platform fees by about 0.1%. Here are 5 key takeaways for investing in wine and whiskey with Vinovest. The global wine industry is worth over $340 billion. Wine has a low correlation with the stock market and is great for diversification. Vinovest provides a liquid market for buying and selling blue-chip wines. The platform is open to all investors. Investors make money on the appreciation of wine in their collection. Follow us on social media to discover more investment platforms.